Welcome everybody, my name is Aman from SMC Wolf FX, and today I'll be backtesting the Euro USD, where you'll also get an insight into how I like to trade the market on a day-to-day basis. So before we get into the charts, just some quick notes. I'll be using smart money concepts along with utilizing the market's algorithm, where you'll be seeing me use the central bankers dealers range paired up with the interbank pricing delivery algorithm to create a daily bias. I'll be considering the average daily range for this pair, which at the moment is about 100 pips, and we'll only be trading from Tuesday to Thursdays, as ideally I like to be away from the markets on both the Monday and the Friday, and we'll be aiming for a single trade setup per trading day. And the way my current trading routine is, I like to have all my market analysis done before the London trading session begins. So we'll be starting our analysis about 6 AM, and we want to be out of any open positions by 7 PM of that same trading day. And just as a reference, my charts are set to the UK time zone. So let's get straight into it now. So the first thing I'd normally do is I want to mark out my central bankers dealers range, and ideally I'd like this to be less than 50 pips, and I'd like to be very precise with this, and I do ignore the wicks. I only mark out the bodies of the candles. So the high of this bullish candle we have at 96385, and then the open, the close of this candle, not the high, is 96343, and in the open of this bullish candle we have 96012, and the range which we've got to work with is about 30 pips, so that's a ideal situation for us so far. So 30 pips is our central bankers dealers range. And then from there on, I'm going to go into my 5-minute chart, and then I'm going to mark out how my interbank pricing delivery algorithm opened up. And that opens up at 5 AM every morning. So if we go to our 5 AM candle and we mark it out how it's opened up for the first few hours up until about 7 AM-ish. So we've opened up bullish. So let's get that marked out. So the IPTA open is bullish for the day, and that already is an indication for me that I should expect a daily bearish bias. So if the IPTA opens up bullish, I look for sells. If the IPTA opens up bearish, I look for buys within that market for that trading day, that is. So we've got our daily bias already pictured out thus far. So now we'll be going back to our central bankers dealers range, and we'll be marking that up by 1 standard deviation at a time. So a standard deviation is, in very simple terms, just a range of the central bankers dealers range. And as we're looking for sales, we're going to be marking it up. So let's mark up 2 times. And just having a look at how price has been previously, we're in a bearish order flow on the Euro USD. So if we go to 1 standard deviation, I want to be looking at anything to the left, and if there's anything I can work with. And already I can see a 15-minute order block where price has not yet gone into. And a order block I see as a footprint left behind within the market. And again, I like to be very precise with all of my charting markup. So we're going to get the high of this bullish candle, which is 96751, and then the low of this bullish candle being at 96579. and let's project that to the end of the day. And let's also put our standard deviation, one standard deviation marked out as well. And just from hindsight, that looks like to be within the equilibrium point of this total order block range. So our one standard deviation. And just having a quick look at that without having anything marked up, we've got an order block here remaining on our 15-minute chart, but price has already tapped into it. If we go up higher, again we've got an order block right here, which is, we can say, in line with 2 standard deviation, but again price has already tapped into it, so we're not going to mark that in. And also keeping our average daily range in mind, if we do go up any higher, we've already captured about 60% of our daily range, but I want to be looking at a daily bias of being bearish, so we don't want price to be going up that much. So let's get rid of our second standard deviation box, and we'll just remain with 1 standard deviation for our London Open. And if we stick with this order flow of bearish, we could get a sell position in and prepare that, and price is already extremely close to this order block. And 7 AM, so we have an hour until the London market opens. So let's put an entry right at the open of this candle, and we'll have our stop loss just above this previous high, above these 2 candles. So our SL just above here. And now let's project how much potential profit we could have. And the way I like to do that is I take my CBDR range along with the 1 standard deviation and get that total range, and then just project that one down as the target for the market algorithm to push price towards. And then again, keeping our average daily range in the back of our head. We don't want it to be too big of a range, only about 100 pips, but again that goes below our previous low, so we do want to stay conservative. So let's target, say, the low point of the volume. So let's have a target of 0.957 of price, which seems reasonable. So we're looking at a risk to return on this trade setup for the day of 124 risk to return, and in terms of pip size, that should be a movement of, let's round it up to 90 pips for the Tuesday. So let's remain within the 15-minute chart and see how this plays out for Tuesday. Okay, so we've tapped into that order now. 7:15, so it looks like the Frankfurt market open volume has allowed price to trade up higher into the 15-minute order block, and it's respected it very well. As again, order blocks are just a hedging program done by commercials, and it's a footprint left behind within the markets. So it's moving good, we're getting good price action throughout the day. It's trading lower, break of structure, and there we go. Target is achieved, and we can say our Tuesday trading session has come to an end. And just from that, you can see how simple it is to use the power of the market's algorithm to project a daily bias and entry points, pairing it up with smart money concepts. Now let's move on to Wednesday. So again, I've already got these put into the chart. So we got Wednesday 7 AM. So let's fast forward this chart to that point. Oh wow, you can see price has taken the previous low out of the Euro USD. So let's get that marked out as well. And the reason I'm marking this low out specifically is because you can see that is a very big impulse to the downside. Huge impulse, and straight after the impulse, price instantly traded back up again, efficiently pricing in the market. And when you have big movements like that, a lot of market liquidity gets left behind. So below this, it will of course be sell side liquidity, and that's what price has done during the Asian range, is taken out the sell side liquidity. And I will be marking that out on my chart. So sell side liquidity, which has been taken out during the Asian trading range. Okay. So now let's begin again. So let's mark out our central bankers dealers range going into the 1 hour chart. Okay, looks like even on the 1 hour chart the price has just gone even lower. So our 1 AM candle, which is here, and project that back to our 7 PM candle. So let's look at this as our high point of the range. So let's look at the close of this bullish candle being at 95996, and that's already there. And then the close of this bearish candle being 95722. Oh, fantastic. Didn't even have to change that. And then the range we have to work with is similar again to Tuesday, so let's round it up to 30 pips as our central bankers dealers range. And then same again, going with our normal routine, we're going to go back into the 5-minute chart and then see how our interbank pricing delivery algorithm opened up at 5 AM. So let's find our 5 AM candle right over here, and we can see prices opened up bearish. So let's get that marked out into the chart. IBDA open was bearish, and like I said before, if it opens up bearish, I'll be looking for a daily bias of being bullish, so I'll be looking for buys in the day. And in a way that makes sense because we've taken out our sell side liquidity from the previous low where we had quite a big impulse. So let's see what else we have now to work with. So first of all, let's mark down our standard deviations, but to the downside, as we will be looking for buys. And let's do one more. I'm doing another one because I can see during the Asian range, price has already gone below the 1 standard deviation. But thing is, that could be the low of the day, so we could be already beginning our bullish daily bias. But however, that is the Asian range, so that wick right there is our Asian low. And always, whether it's an Asian low or an Asian high, there will be liquidity sitting below it or above it. So let's get that marked out, as that is our Asian low. So what am I seeing here right now on the 5-minute? We do have a break-off structure from this point. Of course, our Asian high is all the way up here, so we're not going to focus on that too much as we are bullish. So ideally price will have the tendency to reach up there towards the end of the day or middle of the day or even in the London Open. So let's mark out a break of structure on the 5-minute chart, which is right here, and we've got a candle body close above this previous high. So again, that's an indication that we could be turning bullish for the day. But however, this Asian low is also there. So again, before we do trade up higher, I'd like to see sell side liquidity or further sell side liquidity be taken, and all of the sell stops which are sitting below here in this region here. So let's just fast forward and see what price does. Will it keep on going higher, or will be taking out those Asian lows? And it looks like we've taken out the Asian lows right there. So now I see our sell side liquidity, which is sat below our Asian lows, be taken out. So now, and then straight away we've gone back up again. So now I'd like to see some market price action form where we can try and get a entry in for the day, and we'll be looking for buys only. Okay, so let's work with this 5-minute order block, this bearish candle. Let's mark that one out. Let's mark it out from the opening price to the bottom of the wick. And the reason I'm using this candle is because from that point on, price has just traded up. And if we go to a 1-minute, which you can picture out from even a 5-minute chart, we've got a break of structure right here, a big impulse. A 1-minute break of structure. And let's go back to our standard deviation. So it looks like we have traded below the 1 standard deviation, but we have taken out our Asian lows in this case, and that's what we're working with at the moment. I don't see price going any lower than this because it's taken out the sell side liquidity. That's it. It's taken all of the sell stops, and I see the market is now prepared for its daily bias. So let's put an entry here. Let's go long from this open of the candle, and let's have our stop loss just below these 2 candles over here. No, let's put our stop loss at the previous low. And now let's go to a 15-minute chart. Let's project that to the end of the day, and then do the same we did on Tuesday to have a profit objective. So we take our full range. I'll include our 2nd standard deviation only because price has traded below the 1 standard deviation, and mark out that range, and then I will project that 1 up. As our profit objective. And then let's see if there's anything we can work with here on the left with yesterday's price action as a precise profit level. So let's look at the high of this candle. We've got a price of 96708, and this does look like to be an equal range. This high is 96708. That's a perfect equal high right over here at the price level of 96708. And so let's have that as our take profit level, and let's also rename that to our equal highs. So for Wednesday, we're looking at, rounded up, a 1 to 6 risk to return, where we're projecting to get just over 100 pips in market movement. So let's see how that one plays out for us. Okay, so we're tapped into the market, right over here. We have traded below the 5-minute order block, but that's okay. We've got our stop loss just below the previous low. Right over here. Which I don't see price going below that. Maybe wrong. Or not. Okay, wow. That's extremely close. But again, I'm quite confident with that one because when it comes to price action, we're just getting higher highs, and that's on a 15-minute chart as well. So another break of structure right over here. Let's just get that to the end of the day and see what price is doing. Oh, and there we go. Another day, same concepts applied, utilizing the market's algorithm, and you can see how powerful it is when it comes to the markets, when it is used correctly. So another day, another daily bias which has been valid with the assistance of what the algorithm is trying to tell us in the mornings. Okay, let's go to our final trading day of the week, which is Thursday. So let's go to our last candle, which will be 7 AM on Thursday. And just repeat the same strategy, the same logic, and go into the 1 hour. So let's put our central bankers dealers range. So from the 1 AM candle to the 7 AM candle. Where in this case I can already see that the range is looking a lot bigger. So what's the close of this bullish candle? We've got 97445, and we've got the close of this bearish candle at 96891, and we are working with a range of 55 pips. And as I said, I like to see it to be below 50 pips, but as that's fairly close to the 50 pips, we'll carry on working with that. So CBDR, $55 pips in this case. Let's see how our interbank pricing delivery algorithm opened up for the day. It's looking bearish so far, but let's go to our 5 AM candle and just mark it out, and yep, we've opened up bearish. So what does that mean, guys? We'll be looking for buys again for a second day in a row. So IPDA open is bearish, and we'll be looking for further buys to carry on this bullish order flow from yesterday. And let's project our standard deviation from a central bankers dealers range down. As it's a 50 pip range, I'll only put it 1 down because I'm keeping the average daily range in the back of my head, which is 100 pips. Because if we go below this, that means we've already moved more than 100 pips for the day, and we've taken out the daily range. And now let's see what we have. So we can even pull out our Fibonacci tool on this one. So let's go from the high to the low. So within the equilibrium point and our optimal trade entry point, according to the Fibonacci tool, I'm going to be marking out this 15-minute order block right over here, which is also in line with our 1 standard deviation from our central banker's dealers range. So let's get our coordinates in for that. So the high of this candle is 96383 and the low of this candle is 96176. That's our 15-minute order block. And as we're looking for buys today, I wouldn't want to see price drop below this, because again, that's the market moving more than the average daily range then for the day. So let's put a longer order for our continuation right at the open or the high point of this 15-minute order block, and let's keep our stop loss just below the 15-minute order block. Let's say roughly about here, and let's project a profit objective. So we'll go one up as we have been for this past 2 trading days, and let's mark that as a TP. However, as our central bankers dealers range has been fairly large of 55 pips, that whole range is more than 200 pips. And again, according to our average daily range for this pair, that's double. So we'll be looking for something else. We can even be working with this previous high. So even if we entered here and targeted this previous high, that's 100 pips. So let's do that as our profit objective. I'm going to be taking that out, and we'll keep our take profit level at the high of this candle. Assuming this bullish order flow remains, we'll be looking at taking out this previous high anyways. So there's our take profit for the day, looking at 100 pips, and again a 1 to rounded up to 5 risk to return. And let's see how that plays out for the day. Okay, price has tapped into it, into a 15-minute order block, and as soon as it taps into it, we've got a good rejection from there. And let's just fast forward, and okay, and there's our take profit taken. And guys, just like that, that's an insight into how I like to trade on a day-to-day basis, and you can see how powerful the market's algorithm is when you do utilize it correctly. I hope you guys got some learning from this backtesting video. If you did, do like and subscribe, and I have left a link to our free public Discord server below in the description. I will see you in the next video.